Town Bank Mortgage, NMLS number 512138, is an equal housing lender. This podcast is for informational purposes only. And now, the man born with a 5 o'clock shadow and with the NMLS number 2028-201. He is a gentleman. He is a scholar. He is
Tyler Cralle.
Well, we don't have a bond market today. Bond market is closed for a good reason. It is Veterans Day. Thanks to all the veterans out there. So good reason for the market to be closed. Stock market is up, though. No, well, actually, it is up, but it's open, is what I meant to say. I think two of the major indices are up. The other is down. Down being the NASDAQ, S&P, and NASDAQ are up. But the bond market is closed, unfortunately, so no bond market. So we don't know what is moving rates because rates aren't moving today. There's no movement in rates. Now, sometimes that's kind of a good thing here in the mortgage world. But welcome, everyone, to Wilmington Mortgage. I am the host, the aforementioned host of this podcast, Tyler Cralle, of course, loan officer at Town Bank Mortgage right here in Wilmington, North Carolina. And yeah, so no bond market. We don't have that, but we do have some things to get into. It's not going to be a super long show today, enough to get by. We are going to be talking about rate locks. We got the latest data from Optimal Blue. And then, actually, we'll probably start there, or where we're going now. And that would be the government shutdown. So Wilmington Mortgage, story number one, government shutdown is actually going to come to a close quicker than I thought. So I was wrong. I was thinking we may go into next week for this shutdown to end. I thought there might be some shenanigans in the Senate because they didn't have unanimous consent to kind of just push things forward. So there may be some people trying to throw a monkey wrench and slow things down. That did not happen. In fact, late on Monday, once again, the 8 Democrat senators, or the 8 senators from the Democratic caucus, because Angus King is an independent, so he's not a Democrat, he's an independent, but he caucuses with the Democrats. They actually voted on a new spending package, which now is the Senate's job. They have done their job. There's nothing else, no more procedures, no more hurdles. They have done their job. It is now going to the House. If it passes there, things could be over very quickly. And what's amazing, I mean, this vote came 24 hours, less than 24 hours after that procedural vote that got him to that point. So like I said, I thought there might be some shenanigans, some people trying to slow things down just because of some of the anger that you've seen from the progressive wing of the Democratic Party, people not happy with Chuck Schumer. And it turns out, like always, when it comes to politics, words were stronger than action. So no one actually wanted to slow this down. They might not be happy with it, but nobody wanted to slow it down. So that was able to pass. This spending package will keep things open until the end of January. So we got a little bit more time, kicking the can down the road, a couple more months to argue about all of this. The agreement extends short-term funding for most of the government until the end of January, while providing full year appropriations for agricultural department, military construction projects, and the legislative branch. So that's the minibuses that were in there. As part of the compromise, Democrats who supported the package secured language guaranteeing the federal employees that were laid off during the shutdown would be reinstated. The measure also bars further layoffs through the end of January. So no more, or no one else is getting fired in Washington. Republican leadership also made a key concession, promising a Senate vote by mid-December on the extending Enhanced Affordable Care Act subsidies. Now, that's going to be an interesting debate because what this really has done is kind of put in spotlight exactly how expensive these subsidies are and how much government is subsidizing healthcare for people. And so anyone who was under the sort of impression that a lot of this was happening with insurance companies, no, it's the government has been subsidizing healthcare. And so it's going to be an interesting debate because now more people, I think, are aware of this. So I think it's going to be an interesting debate in December. Like I said, the Senate bill now moves back to the House because the bill is a little bit different. So now the House has to pass it. And more than likely that's going to get done. I think we talked about this yesterday. 36 hours is what they have to, is what Mike Johnson was telling everyone to make sure they get back into Washington within 36 hours. So that means that we could see the end of this shutdown Wednesday, maybe Thursday. I mean, we will see. But yeah, I'm very excited. We're going to get economic data again. I don't remember the last shutdown, or when the last shutdown happened. I think it was 2019. So I didn't really care as much about economic data. I was still in the radio world. It mattered, things I was talking about, but it wasn't the end all be all, kind of like it is now. Well, it's not the end all be all now, but it does help with sort of this endeavor as well as other endeavors, and just sort of knowing what's happening with markets, knowing what's happening with inflation, with the labor market. Let us know what's going to be happening with the bond market. So kind of more important in my life. And I don't remember how long it took to get that all taken care of. So I don't know when we're going to start getting the data, because remember, it's not they're just not releasing reports. I don't think they're collecting data either. So they have to start collecting data again, collect the data, then compile it, then make a report. So I'm kind of interested to see how long it's going to take. Now, of course, we could, if you remember, this shutdown started right at the beginning of October. So we did not get the September jobs report. That data had already been collected. So they just had to compile it and make a report, which they didn't do because the government shut down. And they said they weren't going to release a report. So I guess we could release that data. But then how long to sort of get back on track of this sort of, month behind data? Usually, in September, we get what happened in August, and we get in October what happened in September, and so on and so on. And so I don't know how long that's going to take, but I'm excited to start getting data again. It'll greatly help us from the mortgage side of the markets. And people want to know, hey, what's happening with rates? What do you think are going to happen with rates? And right now, we're just sort of been like, I don't know. We can look at some of these kind of smaller reports, but these are the big dogs. These are the ones that really move markets. So it'll be nice to get those back. Inflation, labor market, housing data, all that good stuff. So very excited about that. So that's going to be happening quicker than I thought. I think I said yesterday it might take 50 days. We would definitely go over 45. Right now we're at 42. They get things done Wednesday, that would be 43. So I said I was pretty confident it would be over 45 days, and looks like I was wrong. We'll see. The House still has to pass it, but kind of thankful that I was wrong about that one. So there we go. Government shutdown looks to be ending quicker than I think any of us had anticipated. All right. Story number 2 here on Wilmington Mortgage. Rate locks. Rate lock. This is one of my favorite reports. It's been a while since I've talked about it, just for whatever reasons. Because, we talk about mortgage demand. We get that every week from the Mortgage Bankers Association. Love those reports. Thank you, Mortgage Bankers Association. But what really matters with regards to the mortgage world is rate locks. Because, mortgage demand is just applications. People say, oh, I'm looking at buying a house. They put an application in, and then things don't really kind of move anywhere. Rate locks, someone's locking in a rate. That means they have moved forward in the process. They either are, deciding on a refi, or they're buying a house or whatever. You're locking in a rate. You are moving forward. And so rate locks are far more important than the data that we get weekly from the MBA. I still love, gives us a good idea of what's going on, but rate locks are kind of the bigger indicator. And in October, despite the fact that rates fell, total rate lock activity fell 4% in October from the month prior. Now, there is some good news in this report, so that's important. But I was a little surprised by that. Like I said, specifically because we have continued to see rates decline. Now, of course, you got to look at this in a context. We saw a huge jump in September. So October was actually the second highest monthly total in the last 3 years. So you got to take it in context. We had such a big jump in September that even with the dip in October, October was still the second best month in the last 3 years. So that's one of the good points in this. Purchase demand continued to weigh on the index, with purchase rate lock falling 1.5% and is now sitting at the third lowest level in the last 8 months. So, you look at October, it's fall. You are going to see a little bit of a drop, just sort of a seasonal drop, big drop in August, and then kind of just not really seeing a big improvement in October. So that's not entirely surprising. But with rates falling, you would think there'd be a little bit more of like, hey, maybe we should be looking at a house right now. Purchase volume is also down 3.9% from 1 year ago, showing that, it's not just necessarily a seasonal drop. It is a little bit lower than I think you would expect it. Refis, however, are showing renewed momentum thanks to the drop in rates. Cash out refis climbed 6.1% from the prior month and are now up almost 30% when compared to last October. So that's looking at cash outs. Rate term refinances fell almost 14% in October. Kind of surprising, but get this, are up 143% on a year-over-year basis, which kind of makes, is not that surprising, considering we were sort of stuck at those high 6, low 7, if not mid 7 rates that we had seen for a year or two. And so, yeah, even though we saw a little bit of a dip in October, 143%, not a dramatic jump with cash outs, because cash outs in a lot of situations, usually people need the money. And so even with the higher rate, they're like, you know what, we got to do it. Sure, it's a little bit more attractive when rates are better. So I'm not surprised that's up year over year, but yeah, big jump for the rate term refis. People wanting the lower rate, lower monthly payment. And as I mentioned, the 30-year conforming rate fell 16 basis points from September and is now down 63 basis points when compared to the same time last year. So we're seeing rates fall. Refis are still showing some promise. Purchase demand, though, not that great. So pick which stat you find a little bit more valuable. Also not surprising, conforming mortgages continue to dominate the market, making up just under 53% of all locks in October. That share was 32 basis points higher than September, and it's just 1 basis point lower than 1 year ago. Borrowers, not surprisingly, are also taking advantage of FHA's lower relative rates. In some cases you could see, I think at one point they were like 50 basis points lower than a conforming or a conventional. So FHA locks jumped almost 18%. However, the share represented an 80 basis point increase from the prior month, although it remains nearly 200 basis points lower than the same time last year. So, like I said, we are seeing somewhat of a jump in FHAs because I think of some of the spread that we're seeing between an FHA and a conventional. But that did sort of surprise me that we did see kind of a drop relative to last year. I was kind of surprised by that. And then one of the interesting aspects of this report is one of the concerns that we've seen with sort of new originations is that people are worried that people are borrowing too much, that we're going back to 2008. Oh no, 2008 all over again. We saw some concern jump up recently when we saw an increase in ARM products. Oh no, here come the loans from 2008, and that people are borrowing too much and they're over leveraged and everything else. This report does sort of counter that. So the average DTI ratio for conforming VA and FHA were unchanged from October. So no change from the month prior, and for at least conventional, and there wasn't a lot of movement in any of them, we did see nearly a full percentage point lower than 1 year ago. And so what that tells me is that there's really no data that people are over leveraged. I'm not saying that there aren't situations where someone may be buying too much of a house, but this idea that we're going back to 2008 and people are borrowing 110% and their ratios are absolutely, crazy, or it's not there. It's not there in the data. And then the average credit score on purchase applications was holding steady at 738, which is actually only 1 point below where we were last year. So we're not seeing any increase in DTI, and we're not seeing any real drop in credit score. And so if there's any fear about, who's buying houses and that, oh no, people are over leveraged and they're taking on too much debt, we're not seeing it. Not yet. Like I said, it's not just month over month, year over year. Very little change in credit score, very little change in DTI. So, like I said, if that's the concern, this report calms those fears. But like I said, the only bad thing, really the only bad thing with this report is just the lower purchase demand rate lock volume. We'd like to see that a little higher, no doubt about that. But, in the mortgage industry, cash outs and rate term refis are sort of kind of helping out a little bit. But yeah, this is a pretty good report. We're seeing second best month with regards to originations in the last 3 years. No real deterioration in credit scores or DTI. And so, yeah, this is pretty solid. So all in all, I would say a pretty good day. I'm pretty happy with it. And that's it. We're not going to do much more. I'm not going to string this along. We said what needed to be said. We got rate locks. We got government shutdown hopefully coming to an end. And so that's all we got. That's all we got here on this Veterans Day 2025. But you guys enjoy the rest of the day. We will see you back here Wednesday for another edition of Wilmington Mortgage. And remember, as always, do not wait to buy real estate. You buy real estate and wait.